Hi Ankur, can you tell us, should we really buy insurance or not? What do you think about it?
You should differentiate between mandatory insurance, if it's mandatory, and if it's not mandatory. If it's mandatory, there is no way out. If it's not a mandatory insurance, then it really depends if you can pay from your pocket or not. If you can pay out from your pocket, as the partner of Warren Buffett, Charlie Munger, also quoted once that he doesn't buy any house insurances anymore because he can pay out of his pocket. So if you can pay out of your pocket, insurance itself is a business. Insurance companies, you have to consider, if you buy a stock at the current price, they may pay you up till 5 to 6% of the market price just as dividends. They are making much more money per stock on that. 5% is just the dividend. So the return on equity is around 10 to 12%. So it's an industry. There, of course, you pay. The insurance should work in a way that you pay an amount which just doesn't hurt you that much, very little amount, to insure something which is a very distant probability. But now it is a really well-established business, and a lot of investors, they need returns. So it's really a decision in your pocket, about your pocket. If you have money to cover your damages, you will be better off on a longer term without insurance.
Tell me about the incident that happened with you today.
Yes. So today itself, an incident happened with me that I'm trying to sell a house which is almost empty. There are a few people still living, but 30% occupancy. And the insurance company called me to check what is the update in the house, as they normally do every 2 years, because they need a reason to increase the premiums. And I told them that I'm about to sell the house and it's partly empty, which caught their attention. Why a house is empty, and they wanted to know more since when. So I understood immediately that there is something which I've said which I shouldn't have said. And they inquired, and I told them that it's partly empty. As I would, a normal person, and even I would have thought that if it's empty, then there shouldn't be any consequences, or if at all, it should be cheaper for me because the house is just closed. But what I came to know from this insurance consultant is they wanted to have more money from me because the house is empty. I was really shocked, and I was out of my home taking this call, so I still tried to interrogate what was the reason. And they told me that in a closed house, they would not know if there is a damage, and it could cascade into a higher damage. But if we just think rationally, don't we lock our homes for a week, for 10 days, for 15 days, for even 2 months, and go on holidays? Don't we travel countries and continents? Don't we leave our homes at 8 in the morning and come 8 in the evening? What if damage happens at 8 a.m. and we come to know at 8 p.m. and everything else is damaged? No, of course, they're just trying to figure out a reason to increase the premiums. On the contrary, if instead of 3 people occupancy in a flat, there are 5, they would say there is a higher occupancy and there is a higher wear and tear. So that's a reason to increase insurances. Imagine a car which you have rented and you're paying insurance on it, and the car is just standing. You rented it and you're not moving it. Ideally, you have low risk. The insurance should be cheaper because 95% of the time the car is just standing, compared to the insurance premiums if the car is constantly moving. Another trick that they do is they charge me the insurance premiums based on the replacement cost. So that's an old house which doesn't have much value of the building but more of the land. but they assume that the replacement cost of this house is 3 times the value. So I pay the premiums based on 3 times the value despite having an old house. That's how mathematics is in favor of the insurance companies, and you as a consumer would end up filling the pockets.
That's so true. That means insurance itself is a fraud, right? What do you say?
If insurance is a fraud or not, I would say if you don't have money, you would like to secure yourself against that distant possibility, even if you are paying a very heavy premium for that. But once you are capable to cover that expenses, you will be better off. So in a long run, if you have that liquidity, you will be better off than being without an insurance. So you asked me about if one should have an insurance or not, and I gave you a real example, a case which came to me and they asked my decision. And it was they were trying in India to get a health insurance close to 65 years of age, and the coverage was up to 5 lakh rupees per incidence per year, and the premium was coming out around 37,000 rupees per year, which roughly is 7.5% premium on the maximum insured amount. So I asked that person, what is your how does your finance look like? And they told me they have liquidity of up to 1 CR, 1 crore. So I told to them, this is a very bad deal, because in worst case, really the worst case, if you do end up being in hospital, so first you have to get sick, then you have to get sick enough to be in hospital, and then your expenses should be up to 5 lakhs or more, and then they will pay out, which could be paid out by your own pocket. So if you have that 5 lakh equity invested in, even in fixed deposit, you will get 7.5 to 8% return, which you are actually paying to the insurance without any payout. And this person has paid this insurance already 15 years. The premiums have been always increasing, not decreasing. So coming back to your question, if you are liquid enough, much beyond your insured sum, which is 5 lakhs, on a longer run, you'll be better off without it.